Okay, folks, here we are. We're not far off seeing in 2023 with the aim of getting fitter, more intelligent, less stressed, or stopping or starting a habit. We often get contacted in January by local landlords and investors who want to change how they run their rental investments. So, this is what I'm going to talk about today about the 5 most common resolutions that we see local landlords actually making. So, hopefully, it'll give you insight into that. Now, if you know somebody that's a landlord, please feel free to tag them in this or share it with them as well. But I just thought I'd give you my own personal knowledge of doing this over the last 30 years. So I've put in this post as well, just a wee bit of detail, but I might go into a bit more detail in terms of the summary that's on this post. So the first one for me is actually getting your finances in order. I mean, the new year's a great time to review your mortgage rates, now more than ever, actually, and to see how much you're paying for insurance, especially if you've not got the right insurer. It could cost you an absolute fortune. I recently changed my insurer from one of the insurers, which is the top in Britain for landlords, and I actually thought they were going to give me a really good deal, and I've been with them for a number of years, maybe about 10 years, and I changed them, and I managed to save £3,000 on my insurance for the exact same type of insurance policy, and it was with the exact same insurance company. So the broker I actually changed, and I actually saved myself £3,000 with the exact same insurer that they were doing it through. So it just shows you there's a fundamental difference by changing. So if you want more details about that insurer, please feel free to message me direct and I'll give you some more details about that insurer. It's also an ideal opportunity to set your repair and maintenance budget for the year as well. Now, the end of the tax year is coming up. Most landlords have their most landlords actually had their properties in their own name. And if you do have your property in your own name, your tax year will be the 31st of March. Well, to split hairs is actually the 5th of April is the end of the tax year for you. But most people run up to the 31st of March in terms of their accounts. So what you should be doing right now is actually forecasting where you're going to be in terms of your rental income coming in, because you know what you've got, you know how many properties you've got, you know how much rent you've got coming in every month, and then you could put that and add that on to the existing point of where you are right now in terms of your profit and loss. In other words, your income minus your expenditure. You could add your extra income on the top, and then you know what your interest rates are going to be because they usually stay quite steady all the time. So you know the additional interest rates, you know the additional overheads, you know the additional maybe council tax costs or anything like that if you've got an empty property right now and you're maybe paying a discounted council tax rate. And you know any other costs like your telephone, your travel expenses, you know how to add that in as well. And then it gives you an idea about the only thing that you don't know is your repairs and improvements, because that will happen as it happens. Or you might know that's coming up already and you've maybe got it planned in, so you can put that figure in as well. And then it gives you the idea of what the bottom line profit will be. Hopefully it'll be profit. If you're maybe in the wrong business if it's no profit. However, you might choose to not make a profit and actually invest in your stock and roll that loss onto next year to offset against maybe a greater profit the next year to bring your profits down. Only reason I know that is because I was an accountant by trade as well. And I've done this for 30 years and I've looked at my own accounts, and this is exactly how I did it as well in the very beginning. I still do it right now as well. So you might actually think, I tell you what, if I take that and I take my income that I'm earning off my job and I actually add both of these together, I'm going to be a higher rate payer. So it might be beneficial for you right now to actually make a investment in your repairs and improvements before the end of the tax year in order to bring your profit level down. So when that adds on to your income that you work in your day-to-day business or your day-to-day life as an employee, maybe, because most people are actually employees or they're retired and they've got an income coming in from a pension, then they add that onto it. It will bring that down possibly into a lower rate band. Therefore, you're saving that money as well. If you end up being in a higher rate band, you potentially could make a pension contribution to the extent to bring you down to lower rate band as well, thus alleviating the higher rate tax rate and also getting the contribution of the lower rate added onto your pension as well. So that's a great opportunity to get your finances in order as a an investor and as a landlord. If you want more information on that, as I said, please feel free to message us direct. The next one for me is probably at the planned improvements. This is the ones that I'm talking about. Just so it's a natural flow into this one. On the subject of the maintenance, the start of the year is ideal for reviewing the condition of your properties. You'll know that you should know the condition of your properties, by the way, if you're a landlord, because you should be doing regular inspections, quarterly, maybe half yearly, but potentially you might have a tenant that's been in there long term, so you know you can trust them, and they do tell you straight away if there's any issues, maybe with the roof, with the plumbing, with electrics, or anything like that as well. And you're able to do that maintenance as and when. So you could maybe plan for your improvements as well, because you possibly know, yeah, it's going to probably need a kitchen at some point in time. Maybe this is the time to do it. It's going to need a bathroom upgrade at this point in time. It's maybe going to need a heating system upgrade at this point in time. You might have an old back boiler. This might be the golden opportunity to upgrade your heating system and actually cut the costs for the running your heating system for the tenant as well. So it's a win-win situation. You get the upgrade, you get the tax deduction immediately this year. It alleviates your tax position. Plus, the tenant actually gets to save money. Old back boilers run at about 55% efficiency, which means 45 pence of that cost of gas goes straight up the chimney. New condenser boilers, combi condenser boilers, run about 95% efficiency, which means only 5% of that £1 spent on every gas actually is lost. So big, huge difference to the tenant in terms of running costs. Hence the reason why you should actually have a progressive policy to replace all your boilers with condenser boilers over the years, and it should be done pretty quick, considering the cost is going up dramatically for your tenants. So that probably is one of the first things you should do, as well as every single property should have double glazing at this point in time. You should potentially have UPVC doors or something that's keeping the drafts out as well. And as well, you should have an EICR, which is an electrical safety certificate. You should have a gas safe certificate. You should have a Legionella certificate. You should also have your smoke alarms in your all interlinked, and your halls upstairs and downstairs. If you've got 2 levels or 3 levels, upstairs, downstairs, another one, and the middle one as well. And then you should have them in every reception room. Plus, you should have as well, you should have a heat detector in your kitchen. They should all be interlinked, so when one of them goes off, they all go off. So it's a quicker early warning system for your tenants. As well as your gas safe certificate, as I said as well. So these are all the different things that you should have anyway as part of legislative requirement. But in terms of your planned improvements, the condition of your properties, and seeing what improvements you're doing, considering what you'd like to do and what you must do to keep providing good standard of home for your tenants as well. You might look at this time of year especially. It's going to be difficult for roofers to get on the roof, but this time of year usually this usually highlights any issues with your roof, because mostly this is the time of year where it's wet, damp and drizzly, plus the fact a lot of snow actually keeps onto the roof itself and actually defrosts over a period of time, and therefore water always finds a way, and that's usually the time of year that actually highlights all the issues with your roofs. So take a note of that as well, so when the roofer is ready to go back up, potentially they can sort that bit where it's at. As well as potentially a roofer can go inside and just have a look from inside the attic to see where the water's coming from, so when it does get dry, they can get up on the roof and they know where it is, because it could start on one part of the roof and it could end up traveling to the other part of your ceiling in the actual living room, or in any of the rooms that are below, possibly because it just runs right along the top of the ceiling itself and then finds the easiest way to get through. Possibly a crack or a hole, or the classic example is it goes straight for where the pendant is in the light and it comes down right at the light. So because that's the only place there's a hole at that point in time. So that's the one about planned improvements. The next one for me is possibly review the rules. Are you and your rental investments legally compliant? This is what I just touched on previously in the sector's regulation and laws. They are constantly changing, ensuring you're on the right side of the legal fence and doing everything properly as is always helpful, as well as you need to have an EPC for every single property. Now in 2025, there's going to be a major change. There's a change coming through anyway to EPC levels. You're only going to be able to rent a property at a certain level of an EPC on new lets. You're going to be given a bit longer for existing lets to get the EPC rating up as well. To find out more about that, again, you can just message us direct on here, and we'll be able to get in touch with you. The Lettings Director will be able to get in touch with you and talk to you about the new EPC legislation coming through as well. That's the Energy Performance Certificate. It's going to be minimum ratings for rentals in Scotland. The next one for me is possibly get organised. An organised landlord is a very successful landlord. And an excellent way you get to an organizational house is in order to go paperless, basically. Now you could consider scanning documents. We do that as well. You could consider storing receipts and accounts in the cloud and keeping all the information you need at your fingertips rather than a box or bed under the stairs. Now, I'll be honest, I use a combination of everything. I use my mobile phone most of the time. I take a picture of the actual invoice or the document itself, and I just email it direct to accounts, and they keep that on file. That's one of the ones I do. I have two bookkeepers who work in remote locations, and I email all the documentation over to them. Plus, they have their own documentation that comes on email from suppliers and also from customers as well. So we know where everything is, and it's all kept in a central location, and we can put our hands on and access all our documents when we need to, in case we need that for maybe a review, possibly by the accountant or possibly by Inland Revenue. In case. So you need to keep records, proper records. One of the things I really get organised is we use Sage. Now, you can just start off with a basic Sage account, instant accounts, which is an online one. You can just start off with one user and one company, if that's all you've got. Now, it doesn't need to be it can be a limited company, it can be a sole trader. That's a different story between limited and sole trader. Whether you should do what is entirely up to yourself and your own tax position. Again, speak to an accountant about that. If you want a recommendation for an accountant, I'm happy to do that as well. So message us direct. So I started off with Sage. I started off initially with a spreadsheet, and then I moved to Sage Instant Accounts, which was basically £100 to buy the package. And I used that for a lot of years because it was remote, and it was for me only on a standalone computer. And I was able to just press a button, and it would give me an idea of situation about where I am right now and reconcile my accounts as well. So I know exactly it matches to the bank. So I've got a profit and loss account at the touch of a button. I've got a balance sheet at the top touch of a button. But and it was only small in the beginning. And a lot of people think, well, why did you do that when it was so small? Because I believed I was going to grow a bigger company anyway. And I thought I better get into the habit right now of doing the accounts on a consistent basis. And how I did it was basically I downloaded my bank statements, and I posted all the transactions from the bank statements because I made sure everything more or less went through my bank. Therefore, it was really easy to reconcile everything with my accounts. It's when you get into buying things with cash, it's no great. Because then you've got receipts everywhere, and you're having to tally them up. You're having a petty cash to look after, and you're having to post things here, there, and everywhere. Whereas if it's all through your debit card and your bank, now notice I say a debit card, it's a good cost control method because it's just equivalent to using cash anyway. But it's actually through your bank, so therefore it's trackable and it's traceable. So you know where it is and what it's for, and you can easily match the receipt you've got with that transaction. So therefore, everything matches up within your system and also with the accounts as well. So that's what I loved about doing that. And very rarely did I use cash for that very reason. Also, get your tenants to pay all the rent into your bank account via rental, via standing orders. You could do that. Give them a unique reference number for the property, so you know it's them it's from. So give each property a unique reference number and put their initials on the end potentially. So you've got the reference number for the property, which is maybe, if it's in the Kirkcaldy area, KDY, and it could be property 001, because you might be planning to maybe get another 10 or maybe 15. So you put 001, and then you put their initials at the end. So if their name is Fiona, it could be F, it could be A, And if their name's Patterson, it could be P. So FAP. So KDY001 FAP. So you know KDY001 is that exact property, and that sticks with that property. And then the initials on the end identifies who the tenant is in the property itself. That's a good way of doing it. It appears in your bank statement. You know exactly who's paid the rent and where it's from. And that makes it easy because you don't need to collect any, you don't need to handle any cash, you don't need to go round to the house as well, which actually puts you at risk because you're now handling cash and you potentially could be going round there and somebody could be waiting for all you know. So again, that takes it out of your hands and keeps everybody safe in the whole transaction. And it keeps it easily auditable for inland revenue purposes, for your accountant's purpose, and also for your purpose as well. Because you might actually forget, did they actually pay their rent? And they go, yeah, I did. It's in your bank. And then you check your bank statement, you check the reference, and you go, so you did. Because it's easy to forget. Remember, most people have a full-time job, or they're on a pension because they've retired and they've got other things to do voluntarily as well. So they've actually got busy lives outside of that. Most landlords only have about 5 properties at the very most. It's very rare for landlords to have big, huge portfolios. Most have maybe 2 or 3 properties, maybe 5 at the most, and that's it. So they don't actually pay a huge attention to detail. That's if you're doing it yourself. An easy way, so it's an easy way to get successful and organized, and rather than actually just keep receipts and then just panic at the end of the year and say, where am I, what am I doing? And then you realize because you've not kept a track of your accounts and because you've not kept a track of your spending, you realize you're actually going to make more, which is going to push you in the higher rate tax bracket. And you've missed that opportunity because the end of the tax year's happened, or it's so close you can't get that kitchen in, you can't get that heating system in time for that expenditure to be used in that tax year. You can't install that bathroom quick enough because the contractor can't do either in time. So this is what it ties in about forecasting and extrapolating to see where you're going to be at the end of the year to plan and make your position as tax efficient as possible. The key here is if you can't discipline yourself to do that, then my next one and my final one is get a good letting agent. That's key because a letting agent will actually control all your costs for you, and they will actually give you a note of what all your costs are anyway. Because the only thing you're going to have outside a letting agent is your mortgage interest if you've got a mortgage. If you've not got a mortgage, you won't have that. You'll maybe have your insurance as well, your insurance costs, and maybe minor costs as well. But if you've got a letting agent running it, they will collect your rent, and then they will also do your repairs as well for you as well at your approval. So, you usually give a letting agent probably up to £150 as an authorization limit. That's a good one to do. Give them up to £150 so they don't need to phone you for certain things. If they're good, they'll know their stuff and they won't be spending your money like it's going out of fashion. They will be really good at cost control on your property. So you can give them an approval limit so they don't bother you as much. And then it comes through, and then what happens is you've got on your remittance. I'll actually show you one here. See it on your remittance here, because I get this because I've got a letting agent as well. On your remittance, you've got your rents up here, and then you've got your costs down here, and then you've got the net amount that you get paid on here on the remittance itself. So you know what the costs are because they're on there by your letting agent, and you're also rent on there. So when you get to the end of the year, if you do it on a monthly basis and you've got one remittance every single month because you do that, and you've got all the properties on there, it's only 12 remittances you've got every year, and it's an easy one just to add up. Or you might just ask your letting agent to put them, give you a note of them all on the one remittance at the end of the year, and you'll have everything in a one-off for the whole year that your letting agent's done for you. Therefore, all you need to do is plug that into your spreadsheet or your actual software that you're using, and it just works it all out for you. Easy gig, really easy. Think about all the time that you'll save. How valuable is your time? This is what a lot of landlords don't understand. Is the more important thing? If you do it right and the numbers are right, you'll always make money, or you'll always make profit in buy to let and in property investment. So that's a given. But the most important thing for most people is to buy back time with that money. Because most people lead busy lives, and it tends to be people that want to invest in property to set themselves free from the existing hamster wheel that they find themselves on of the home to work routine every single day. Home to work, home to work, home to work, live for the weekend. Monday, home to work, home to work, home to work, live for the weekend. And that's essentially what people are trying to get off, or they're trying to bring back some of their time, because in order to give that time to other things like their family, like a bit more quality of life, a bit more relaxation in their whole life itself. And that's why most people invest in property investment. That's why I invested in property investment. It was never about the money. It was everything to do with the time. I wanted to buy back my time because I was a financial director in industry, and I was working almost, well, there's 168 hours in a week, and I think I worked 168 hours a week. I ate, slept, and breathed my work every single time. But I love what I do, even this, and even in manufacturing when I worked as an accountant. I still love what I do, and I loved what I do before. I've always loved what I do, but I still wanted back my time because I felt I was on that hamster wheel, and I didn't have a choice, and I always had to do this, whether I liked it or not. And that's why I started in property investment, to buy back my time. Essentially, become a time lord. In a nutshell. People call themselves property ninjas, but I call myself a property time lord, because I bought back my time, and I gave myself freedom, because my income was no longer dependent at some point in time once I built my buy-to-let business. It was never dependent on my ability to perform anymore. In other words, if I got hurt or had an accident, or I became ill and I couldn't go to my work and I couldn't trade my time for money, I always had money coming in from my property investments. I always had equity built up in my property investments, so I could sell some of them to actually give me that time back in order to do what I needed to do in these situations. So I never wanted to be in that situation. I also never wanted to be controlled to a degree by a boss possibly I didn't get on with. And it gave me these choices just to move to another company if I wanted to. And I always had that in the background. So it was always like a safety net for me as well. That's how I treated property investment. That's how I looked at it. I fed the baby every single time. If anybody knows what you mean by that, when you're starting a business, I looked after the business all the time. I invested in the business all the time. I invested in the stock all the time. And that's what ultimately set me free. And that's what we do as letting agents for our clients as well. We do all the work in the background for them, and they make the major decisions when we ask them to, because we'll go to them anyway. But we take most of the stress off them for that reason. That's why we're the #1 letting agent in Fife. That's why we've got the Silver Award, #2 in Scotland, for what we do for a letting agent as well as the #1 in Scotland for estate agency. So hopefully that's given you a great idea about getting a letting agent. Well, working with an experienced letting agent is quite important as well. I'm just looking at the notes here. Who knows the Fife area, particularly all the areas. Yeah, we tend to know most of them because we've been involved in it that many years, and can help with the resolutions. Above it we just talked about, and it could be the best money you've invested for the whole year and for next year as well. Remember, you're buying back your time. What is that worth to you? Most properties only really take on average possibly the price of a cup of coffee every single day to manage. The price of a cup of coffee, yeah, to manage a property. Just think, for the price of a cup of coffee every single day, you don't need to worry about your property anymore, and you could actually have somebody else manage it for you. Potentially as well, for some landlords who've actually been, charging a lot less than what they should be, and they should be charging the market rent, then the difference between what they were charging and what the market rent is when they go to re-let a property is often the amount that the letting agent would actually take anyway. And we've had that before, where I've come across landlords like that, where they've actually been charging so little because they've not been monetizing their time. They've just been giving it for nothing. Whereas if they charge the right amount, then the letting agent could look after it, and they have that freedom now. They have that time back to themselves. So that's another way in the best investment for the year. The whole point of property investment is to set you free and do what you need to do. You're a long time dead. You may as well go for it now. So If you aren't already a landlord, but resolved to actually invest in property in the Fife area in 2023, you can contact us today as well. We do a private Zoom session every single month. We only accept 5 investors in the private Zoom session. So we have 3 already committed, and we need another 2. We're happy to coach another 2 on their property journey. So if you want to get in touch with us and you want to be part of that team, by all means, get in touch with us. And that's it, guys. Thanks for joining me today, and I'll see you tomorrow for the next installment. Bye-bye for now.